Welcome everyone. Are you dreaming of home ownership in Canada but worried your income might hold you back? Worry no more. I'm your host Dharmin Kumar, and in this series, I will be your guide to navigating the path to home ownership, even with a low income. So, I will cover everything you need to know from setting a realistic expectation to exploring government programs that can give you a leg up. So I will also help you to compare lenders, strengthens your application and understand the closing process. Throughout this series, I will offer practical tips and strategies specifically tailored for low income borrowers. So, whether you are just starting your research or are ready to take the plunge, this series is absolutely for you. So, hit that subscribe button so you don't miss a single episode. Give this video a thumbs up if you are ready to achieve your home ownership goals. So let's get started on making your home ownership dream a reality. In the next episode, we'll talk about setting expectation and getting your finances in order. Stay tuned. So step number 1, assess your financial situation. This might sound intimidating, but it's simply gathering information. Grab a pen and paper and open a spread worksheet because I am going to uncover your financial strengths. So let's break it down. First one is the income. Look at your pay stub or tax slips. What's your monthly income after taxes? And debts. List all your debts, including credit cards, loans, and car payments. Note the minimum monthly payments for each. Look after your savings. How much have you saved for a down payments, including savings accounts, RRSPs, and any tax-free saving accounts might you have, TFSs. Note down your expenses. Track your spending for a month. Every coffee, grocery bill you and entertainment cost goes on the list. Be honest. Be honest. List down everything. Here is the key I'm going to discuss with expense. Look for area to cut back. Can you brown bag lunch or find cheaper entertainment option? Each dollar saved goes toward your home down payment. So debt, high interest debt can be consolidating debts or creating a debt repayment plan. This assessment isn't just about numbers. It's about understanding your financial habits and setting realistic expectations. So there are many budgeting tools and apps available online. They can help you categorize your spending and identifying areas of improvement. You can use those apps. I hope that you have successfully completed step number 1. Now let's move to step number 2, which is government program. In the last episode, I talked about setting realistic expectations and getting your finances in order. Now let's dive into some amazing government program designed to help you on your home ownership. Canadian government standards the challenges of buying a home, especially with a lower income. That's why they offer several programs to make it more achievable. First one is the first time home buyer initiatives. We call it FTHBI. This is a big one. The FTHBI helps you your down payment by providing a shared equity mortgage with the government. They can contribute either 5% or 10% of the purchase price depending on the home value. So there are some requirements, but this can be huge boost. Another program is Canada Mortgage and Housing Corporation. We call it CMHC, Affordable Housing Program. The CMHC offers a variety of programs depending on your situation. For example, their down payment assistance initiative can provide an interest rate loan up to $15,000. Amazing, right? So there are just a couple of examples, and there might be other programs specific to your province or territory. Researching these programs is crucial. It can make a big difference in how much you can borrow and how affordable your mortgage payment will be. So if you need help, then don't try to navigate this alone. A mortgage broker can help you understand the different programs and determine which ones you might qualify for home loan. They can also help you compare lenders and find the best mortgage rate for your situation. Remember one thing, when you are looking for the home, government program can be a game changer when it comes to buying a home with a low income. In the next episode, I will explore some additional strategies to strengthen your mortgage application. Stay tuned. Step number 3, research and compare lenders. What we do in this step? I have talked about setting expectations and explore a government program. Now let's get down to the nitty-gritty. There are many lenders in Canada, each with its own criteria and rates. Here is a breakdown of the two main categories. The A category is A lenders, major banks. These are big banks with stricter qualification requirement. However, they often offer the best interest rate, especially for those with strong credit and higher income. The type lender B. B lenders, alternative lenders. These lenders are more flexible with qualification, which can be helpful for low income. However, they typically change higher interest rate. So there is no one size fits all answer. So comparing lenders is crucial. Comparison strategies. So I will talk about the comparison strategies as I promised in this video. So here are some key factors to consider when comparing lenders. The first one is the interest rate. This is a big one. Even a small difference in the rate can make significantly impact your total mortgage cost. Prepayment options. Do you want the flexibility to pay down your mortgage faster? Mortgage term. This is the length of your loan. A longer term means lower monthly payments, but you will pay more interest overall. Fees. Be aware of any origination fees, application fees, or other charges associated with the mortgage. Don't forget to consider your comfort level with the lender. Building a good rapport can be important throughout the home buying process. In this area also, if you need any help, a mortgage broker can be your secret weapon when comparing lenders. They have access to a wide range of lenders and can negotiate rates on your behalf. So approach them while doing the research. Brokers are typically compensated by the lenders you choose, so their service is usually free to you. By researching and comparing lenders, you can find the best mortgage rate and terms for your situation. In the next series, step number 4. Step number 4, prepare your application documents. I have covered setting expectations, exploring government's programs, and comparing lenders. Now let's get you prepared to submit a winning mortgage application. So, the paper chase. Getting a mortgage involves a fair amount of paperwork, but don't panic. Here is I will a breakdown of the key documents I will you will likely need. The first document, proof of income. This typically includes pay stubs for the last few months, employment letters, offer letter, or tax return for self-employed individuals. Financial statements provide a bank statement showing your income, deposits, and regular expenses. Now, proof of down payments. This could be bank statement, investment account statement, or a documented gift from a family member. Identification. You will need a government issued photo ID. Property information. If you have found a home, get a copy of the purchase agreement and property tax information. This is not an executive list, and specific requirements can vary depending on the lender. Here are some tips to ensure a smooth application process. I will discuss with you. The first one is gather documents early. Don't wait until the last minute to collect everything. Organize everything. Make copies of yourself and keep everything neatly and organized in a file. Be upfront of your own and honest. Discover any debts or liabilities you have. By being prepared with the right documentation, you can avoid delays and present yourself as a reliable borrower to the lender. In this area, if you also need any help, again, a mortgage broker can be a valuable resource when preparing your application. They can help you understand what documents are needed and ensure they are presented in a way that strengthens your application. Having all your documents in order is a great step towards getting approved for your mortgage. The next step is fifth step, submit your application. I have covered everything from setting expectations to preparing your application and the government program. Now it's time to take the plunge and submit your application. It is a submission day. Submitting your application can be nerve-wracking, but you have come a long way. Most lenders allow online submissions these days, which can be a convenient way to get things started. Once you submit, the lender will review your application and financial situations. This typically involves verifying your income, your employment, and your credit score. The waiting game. The waiting game can be tough, but it usually takes a few weeks for the lender to make a decision. During this time, stay organized and be prepared to provide any additional information they may request. Possible outcomes. There are a few possible outcomes after submitting your application. The first outcome may come as an approval. This is the best case scenario. Of course, congratulations. Conditional approved. The lender may approve your application with certain conditions, such as requiring a larger down payment. Daniel, but don't be discouraged. Analyze the feedback and consider replying after improving your credit score or saving more for a down payment. Even if you don't get approved right away, there are steps you can take to improve your chances in the in the future. In this area, if you also need help, a mortgage broker can be your guide throughout the application process. They can explain the different outcome and help you navigate any challenges that arise. Next is submitting your mortgage application is a big step toward home ownership. In the next step, I will discuss some additional tips to improve your chances of success even with a low income. Next, sixth step, the approval process. I have covered everything from setting expectation to submitting your application. Now, let's dive into the exciting world of mortgage approval. Once you submit your application, the lender goes into overdrive. Here is what typically happens. Verification. The lender will verify your employment, income, credit, score throughout various challenges. The risk assessment. They will assess your financial situation and ability to repay the loan. This includes your debt to income ratio and overall financial stability. And the property appraisal. If applicable, for purchase loans, the lender will order an appraisal to determine the property's value. The lender will use all the information to decide whether to approve your mortgage and if so, under what term. There are a few possible outcomes after the lender's review. Final approval. This is the golden ticket. You are officially pre-approved for a mortgage. Congratulations. Conditional approval. The lender may approve your application with certain conditions. These could include increasing your down payment, reducing debts, or providing additional documentation. Denial. Don't be discouraged. The lender will provide feedback on why your application wasn't approved. Use this information to improve your situation and reapply in the future. Remember, even if a denial doesn't have to be the end of the road, I have tips for success, especially for low income. So let's look into this. Here are some specific tips to increase your chances of approval even with a lower income. Solid employment history. Demonstrate a stable job with consistent income. Improve your credit score. This is crucial. Aim for a credit score in the mid 600s or higher. Save a large down payment. A bigger down payment reduces the risk for the lender and better terms. Consider a co-signer. Having someone with good credit co-sign your application can strengthen it. By following these tips and being prepared, you can increase your chances of mortgage approval even with a low income. Getting approved for a mortgage is a major step toward home ownership. In the next step, I will discuss some additional tips for navigating the closing process. Next and the last step is step number 7, closing the deal. I have covered everything from setting expectations to navigating the approval process. Now, let's talk about the exciting and sometimes overwhelming final step, closing the deal. Smile on your face. Congratulations. It is a closing day. Countdown starts. Once your mortgage is approved, there is a flurry of activity leading up to closing day. Here is what to expect. Lawyer notary review. A lawyer and notary will review all the closing documents, ensuring everything is accurate and legal. Final inspection of the property to ensure it it's in the same condition as when you agreed to buy it. And the finalized paperwork. This involves signing a mountain of documents. So be prepared. This can be a stressful time, but your lawyer, your notary, or mortgage broker can guide you throughout the process. The big day for you. This is where all the paperwork comes together and you officially become a homeowner. So what typically happens when closing happens? Sign on the dotted line. You will sign the mortgage documents and finalize the purchase agreement. Fund exchange. Your lender will transfer the mortgage funds to the lawyer notary who will pay. Be prepared to bring your down payment, closing cost, and proof of home ownership insurance to closing. So, as I promised, additional tips for closing. Here are some additional tips for your smooth closing, specifically with a low income. What the best you can do on that day? Review everything carefully. Don't hesitate to ask questions about any documents you don't understand. Budget and closing cost. Closing costs can add up, so factor them into your overall home buying budget. Celebrate responsibly. You deserve to celebrate, become a homeowner, but remember, you have a mortgage to pay now. That's all for our series in getting a mortgage with a low income in Canada. I hope this information has empowered you on your home ownership journey. Remember, buying a home with a low income requires planning, preparation, and a little persistence. But with the right strategies and support, it can absolutely be within your reach. I want to thank you for joining us for this series. Don't forget to like and subscribe for more informative content. If you have any questions, leave a comment below and I will do my best to answer them. Check out our website for more resources and getting a mortgage in Canada. Hit that notification bell so you never miss a new video. Thanks again for watching.